Hey everyone, Willie Joe here. No update on my order for the Mustang Mach-E Select Trim, but I did want to take a second to make a video about the EV tax credits in the year 2023. I've been combing through my comment section and there's a lot of miscommunication and misinformation about what qualifies, what doesn't qualify. And in today's environment, the IRS, Department of Treasury, they're all changing the rules so quickly that it's hard to keep up with what's going on. So I thought I'd make a video clarifying everything so that we are on the same page about what qualifies for that $7,500 federal EV tax credit. Just to be clear, I will only be talking about purchasing vehicles. I will not be talking about leasing vehicles. Leasing EVs is probably better reserved for a separate video just to not cause any more confusion. So stay tuned. We're going to break down the 2023 federal EV tax credit right now. And just so you know, it's around 5 p.m. Pacific time. It is December 31st, so happy New Year's Eve to everybody out there. Honestly, this channel came out of a side project. I really am very interested in EVs. I love EVs and I love cars more generally. And I just thought to make a video kind of documenting my research, documenting my experience, and I've met a lot of great people along the way. Talking to several of you on the comment section and seeing all the positive reactions to my videos really gives me, I guess, motivation to get up and do these videos every so often. So as we go into 2023, I want to thank you so much for following me in 2022. I have more content with my actual vehicle in 2023. So I hope you can subscribe to my channel and follow me along on this ride. Okay, let's dive into the federal EV tax credit and what qualifies for that full $7,500. The main thing we need to remember is that there are two buckets of requirements that the transaction must meet in order to qualify for that full federal EV tax credit. The first bucket is that you as a buyer need to qualify, and the second bucket is that your vehicle purchase has to qualify. We're going to go through all of the requirements right now. To obtain the EV federal tax credit in the year 2023, you as a buyer must meet these criteria. The first criteria is that you must be purchasing the vehicle for your own personal use. The second criteria is that you must use the vehicle primarily in the United States. And the third and last criteria for you as a buyer is that you must meet certain income requirements. So those are the criteria that you need to meet in order to qualify as a buyer for your federal EV tax credit. Now, the vehicle itself must also qualify and has to meet these criteria. The first vehicle criteria is that the vehicle's battery must have at least a 7 kilowatt hour capacity. The second criteria is that the vehicle must weigh less than 14,000 pounds. The third criteria is that the vehicle must be brand new. The fourth criteria is that the vehicle must be made by a qualified manufacturer. The fifth criteria is that the vehicle must meet critical components and battery composition requirements. And the sixth and final vehicle criteria is that the vehicle must have a base MSRP below the IRS set limit. Gone are the days of buying any EV on the lot and automatically qualifying for that federal EV tax credit. Now I'll be breaking down each of the criteria among the two buckets so that you can make the best educated decision for yourself on whether or not to move forward with your purchase of an EV. But before we get into the criteria, I do want to make sure that we have a solid understanding of what a federal tax credit is. If you qualify for the federal tax credit, you should not expect a check in the mail for $7,500 just because you bought an EV. A federal tax credit is a deduction of the amount of taxes you owe. Let's run through some examples here so that we get a full understanding of how this federal tax credit works. Let's say, for example, in the year 2023, you will be owing $10,000 to the IRS. You qualify for the $7,500 federal tax credit, so $7,500 gets deducted out of your $10,000 tax amount due to the IRS. Let's say that you owe $7,500 and you qualify for the $7,500 federal tax credit. So $7,500 minus $7,500, your balance gets to zero. You don't owe anything on your taxes. And lastly, let's go through the example that you owe $5,000 in the year 2023 to the IRS and you qualify for that $7,500 federal tax credit. you will get a deduction in the amount you owe of $5,000. You do not get $7,500. You do not get refunded that additional $2,500 that is the difference between the $7,500 federal tax credit and the $5,000 you owe. You will only get the amount that you owe. You cannot roll over any unused credit to any future years. It's pretty much, if you owe that amount, you'll get that amount credited and nothing more. I do want to recommend reach out to your tax professional about your unique situation. I am not your tax professional. I'm not giving tax advice. This is just a basic high-level understanding of how a federal EV tax credit works. So now that we have a basic understanding, very high-level understanding of what a federal EV tax credit impacts your bottom line, the first bucket of criteria that we're going to talk about is the buyer requirements. So the first two criteria of the buyer requirements are very simple and straightforward. You are either going to use the vehicle for your own personal use or not, and you are going to drive the vehicle in the US or not. Very simple, straightforward. We're not going to spend any time there. Let's jump to the third criteria in the buyer requirement bucket. The third criteria is that your adjusted gross income for your household must be under IRS set limits. And this is going to be based on how you file your taxes. If you file your taxes married and filing together, your adjusted gross income must be under $300,000. If you are the head of household, your maximum limit to qualify is $225,000. And if you are any other type of filer, your max adjusted gross income that you can make in order to qualify is $150,000. This rule goes into effect January 1st, 2023. There is no delay on this ruling. This is going to start tomorrow. A few nuances here about adjusted gross income. You can use the adjusted gross income of the year that you took delivery of your EV vehicle or the year prior. As long as your income, your adjusted gross income, is less than those set limits, whether you're married, head of household, or any other filer, as long as you are under those limits in one of those 2 years, you qualify under this requirement. A few personal thoughts about the adjusted gross income limit. I get it. I know what the IRS is doing. If you are a high income earner and you're buying the average price for an EV, it's quite high and you don't necessarily need the federal tax credit. But if your goal here is to accelerate the adoption of EVs, then you're in fact slowing your progress towards that goal because there are less people who qualify for the EV tax credit and probably wouldn't be making the purchase if there wasn't an EV tax credit. So I can see both sides, but that is just my own personal opinion. Okay, so that covers the 3 criteria for the buyer requirements. Let's switch gears and talk about the vehicle requirements. The first 3 criteria in the vehicle requirements bucket are very simple and straightforward, and they are going to be applicable to most vehicles that you are going to purchase for your own personal use. Most vehicles are going to be greater than 7 kilowatt hours. Most vehicles are going to be less than 14,000 pounds. And if you're buying a brand new vehicle, your vehicle is going to be brand new. On to the 4th criteria, the vehicle has to be made from a qualified manufacturer. What the IRS is doing here is they want to make sure that you're not buying the vehicle from your creative neighbor down the street or your Uncle Tom who's very handy with cars. They want to make sure that it's coming from a legitimate automaker. You can go on the IRS's website and see a list of qualified manufacturers. But if you're considering purchasing from very big name brands, Volkswagen, Lucid, Tesla, Ford, they're all going to be on this list. So not too much to worry here unless you're going really off the rails. Moving on to the 5th criteria. The 5th criteria is that the vehicle must be assembled here in North America. With that being said, IRS is considering Canada, United States, Mexico as North America. In my situation, my Ford Mustang is being built in Mexico, so that qualifies as an example of a vehicle assembled in North America. But to find out if your car is assembled here in North America, you can ask your dealer for a car that you're considering. They are going to communicate where that vehicle is being assembled because that automatically benefits you, especially if it's here in North America. Or you can look up on the IRS's website if you already have a VIN. It'll tell you where that car was assembled. Next, and arguably the least clear criteria, is the critical minerals and battery components criteria. Each of the parts of this requirement, the critical minerals and the battery components, each contribute $3,750 towards the federal EV tax credit. So if you meet the criteria for both, then you get the full $7,500. If you only meet the criteria for one of them, you only get $3,750. You'll see here the battery components as well as the critical minerals requirements by percentage for each year over the next 5+ years. Overall, as a shopper, I wouldn't worry too much about these percentages and thresholds and yearly schedules. The automakers are going to do their best to meet these requirements, and the IRS created these requirements specifically for the automakers to shape their sourcing and their manufacturing practices. A manufacturer, because of this new ruling, has every incentive to change their internal sourcing and to change their battery composition so that they are in full compliance with the IRS. But as a shopper, I would expect that these automakers kind of mobilize their resources so that they can qualify each year for the full $7,500. But that information is still very unclear. It's unclear how automakers are going to adapt to this new ruling and the percentage thresholds, but I would say not to worry about this quite yet. And the main reason I say not to worry about this is because the IRS did decide to not put this requirement into effect on January 1st, 2023. To give automakers more time to adapt and find better options to meet these critical minerals and battery composition requirements, the IRS has said and announced, you can see here, this article here on Reuters, that they are going to implement this new requirement starting March 2023. So if your vehicle is at risk, or if you don't want to take any chances with your vehicle not qualifying, and you have the opportunity to take delivery in the first few months of 2023, I highly encourage you to expedite that process and take delivery as soon as possible. You don't know 100% if your battery is going to meet those requirements, so I would try to slip in before those requirements go into place in March of 2023. Some personal thoughts here. Again, I 100% think that this ruling and this requirement is specifically for automakers to kind of change the way that they source and manufacture their batteries and where they come from. They really want to encourage made in America batteries. So I get it from the IRS's perspective. I get it as an American perspective, but I do think that it makes it very difficult for shoppers to follow the rules. But I'm hoping that automakers, with their thousands and hundreds of thousands of people who focus on this type of stuff, they are going to mobilize their sourcing, they are going to mobilize their manufacturing, and hopefully us as buyers don't have to worry about it. Only time will tell if automakers will be that quick to adapt. Okay, lastly and most recently announced is the MSRP limit. This one is a shocker to many of you, especially those of you who have already ordered a Mustang Mach-E. I will say pay very close attention to this. This is going to be very impactful for you. So the last criteria in the vehicle requirement bucket is that the MSRP of the vehicle must not surpass these limits. For a van, a SUV, or a pickup truck, the limit is $85,000 for MSRP, and for any other vehicle, it is $55,000. And the IRS does define what the MSRP is. MSRP equals manufactured suggested retail price, and that does include the options and accessories that you choose at the time of purchase, but this does not include delivery charges. It also doesn't include destination fees, so you want to make sure that you are looking at just your MSRP with the options you've selected. And this rule does in fact go live tomorrow, January 1st, 2023, so there is no delay on this ruling at all. So this MSRP ruling is unfortunately going to be a nail in the coffin for several Mustang Mach-E buyers who are heavily relying on that $7,500 federal EV tax credit. If you are like me and you placed an order for a 2021 or 2022 Mustang Mach-E and got your order delayed and upgraded to a 2023 and you're still waiting delivery, I recommend you go to your order details right now and check what your MSRP is. You'll be surprised to find out that a lot of vehicles unfortunately do not qualify based on this arbitrary $55,000 limit. More specifically, for many premium GT California Route 1 trim buyers, your vehicle may not qualify for the $7,500 federal tax credit if you haven't received it yet. The biggest issue here is that the IRS has classified the Mustang Mach-E as an other vehicle and not as an SUV. This is very surprising because the structure of the Mustang Mach-E shares very much the same dimensions, very similar to other actually classified SUVs. So it's really surprising that the Mustang Mach-E does not qualify as an SUV and thus does not get that $85,000 limit. I do believe this is because of certain dimensions or parameters of the vehicle. And more specifically, I believe it's because of the clearance from the ground to the bottom of the vehicle does not qualify the vehicle as an SUV, but I don't really know the reason why the IRS did not define it as an SUV, but I'm just going based on what the IRS has classified it as. So if you are in panic mode that your vehicle does not qualify anymore based on this $55,000 threshold, I would recommend that you hold tight and try not to take delivery and delay delivery of your vehicle as long as possible. Let's let the dust settle and let's have some time for Ford to understand this new ruling and see if they make any price adjustments to help those who have or will be placing an order for a Mustang Mach-E, and let's see if their Ford lobbying power has any sway here. My personal opinion on this criteria, this really sucks for those of us who have placed an order for a Mustang Mach-E and we're waiting for it. If we meet every other criteria and this arbitrary $55,000 threshold takes us off of the qualification for a $7,500 tax credit, that sucks for us. That sucks for Ford also because they are not getting that revenue. So like I mentioned, hold tight. I really think that the dust is going to settle. We might see some price cuts. We might see some lobbying. We might see this ruling change. Let's see how the automakers adapt to this new ruling, if it changes the landscape at all. So again, hold tight, but overall this sucks for Ford buyers as well as for the company. I made this chart here to highlight the specific trims that qualify based on this $55,000 limit. You'll see here that the select rear-wheel drive and all-wheel drive do qualify if you are just getting the base MSRP and no additional accessories or options. And the premium rear-wheel drive does qualify just under the $55,000 threshold. Again, base MSRP, no accessories, no options. Everything else, unfortunately, is above that $55,000 threshold. So that is going to be a really big damper if that $7,500 federal tax credit matters to you. So how do these requirement buckets and criteria affect my order for my 2023 Mustang Mach-E Select trim? Let's go through the list here. In regards to the buyer criteria, I will be purchasing the car for my own personal use. I will be driving it primarily here in California, the United States, and I am married, so my threshold, my maximum adjusted gross income is $300,000 to qualify, and my wife and I combined do not make past $300,000. In regards to the vehicle requirements, the vehicle has a 70 kilowatt hour battery, so well above the 7 kilowatt hour minimum. The vehicle weighs about 4,000 pounds, which is significantly less than the 14,000 pound limit. I will be purchasing the vehicle new. The vehicle is made by Ford, and that is a qualified manufacturer. The vehicle was manufactured in Mexico a few weeks ago, so that's all good. The big mystery here is the composition of the battery used in my Ford Mustang Mach-E, but fortunately for me, the ruling will not be taking effect until March of 2023, so we don't need to pay attention to that criteria. And lastly, my base MSRP is around $49,000, and that is well below the $55,000 maximum. So I should be all in the clear of getting that $7,500 federal EV tax credit. Big sigh of relief, really excited about that because personally, I'm a budget consumer and any dollar really helps. Okay, if you've stuck with me for that long, you're probably in the year 2023 now, so Happy New Year. Thank you so much for watching. I hope this video is helpful and informational. I put a lot of the links down in the description for the IRS's website, for the EPA's website, for the Department of Treasury's website, so those resources should be very valuable for you if you have any questions about it. If you do have any questions, feel free to shoot me a comment down below. I'll try to answer any questions I can about this because this is very impactful to a lot of people's wallets. It's very impactful for my wallet as well, and the federal tax credit is one of the main reasons why I made this purchase. So personally, I'm really glad that I still qualify, but I really hope that your purchase does too. I 100% agree with you. If you need that federal tax credit and decide to cancel your order for a Ford Mustang Mach-E, but like I mentioned before, hang tight, try to delay accepting delivery as long as possible so that we can let the dust settle. So thanks so much for watching. Thank you for following me since 2022. Last year was a great year. I really built some really great connections with y'all, and I hope to build even stronger connections with many more of you in 2023. Happy New Year. I'll see you on the next one.